The Fed cuts the rate by 0.5%. Bitcoin crushes $60,000. We see the treasuries are actually falling. We're going to take a look at all of that here. But before we get going, smash that like button, subscribe if you've been with us for a while and haven't done so yet. Check out the Trade Cave store, link in the description, as well as the channel bio. Let's talk about the Fed rate cut. So I missed this yesterday. I was actually out sick yesterday, so I did not do a video on this, but I think that's probably a good thing. We got a little bit of more news out. We've had some time to digest this decision, and now let's talk about it. So they did a 50 basis point cut, and I have mentioned in the past that that's not something that I really wanted to see. That would show that the Fed was actually behind on things and not necessarily in full panic mode, like I would say if they'd done a 0.75 or a 1% cut. But it shows that they are lagging behind, that they have been somewhat caught with their pants down by the market. So that is something that I think this is telling us right away. Now, the market so far has absolutely loved this, and that's to be expected. And we'll see that might be something of a bull trap. We'll talk about that in a minute here. So, anyways, yeah, they did the 50 basis point cut. Now, they're doing this because of unemployment. So they want to see unemployment go down, right? They don't want it to go anywhere past like 5%. 5% is considered full employment, and right now unemployment is kind of getting in that 4 range, and it's getting close, so that they are trying to front load their rate cuts in order to keep unemployment from going over that 5%, that magical 5% number that is basically considered um, full employment. So they don't want to go below that. That's what they're trying to do now. So they feel as though they have sufficiently conquered the first part of their directive, which is inflation, and now they are addressing the second prong of their directive, which is employment, and they need to ensure that employment stays strong. So that is why they're doing the 0.5 cut. Now, the thing that concerns me about that is it shows that there is some sort of um, lag between what the Fed should be doing and what they are doing, and that a 0.5 means that they are being reactionary to what is happening. Now let's go look at one thing. So the U.S. 10-year, 2-year has remained uninverted. And remember what we said about this, that when that reddish pink line there is below the blue line, when it's down there, we are on a timer for potential recession. So now that has happened, we got a 0.5 cut showing that the Fed is on the back foot. We've got an uninverted yield curve. Things are a little dicey. Now, it doesn't mean that we're going to go crashing and burning right away, but it does mean that we need to be watching for the signs. If we see unemployment tick up in a big way all of a sudden, that's probably going to send us crashing down. Basically, if there's any misstep in the economy, we are likely to see a significant sell-off of that. Now, that doesn't mean like, that the sky is falling or anything. It might be like a quick 7-10% drop. If it's something that isn't super scary. If it is something that is pretty scary and terrible, then we'll see something like a 30% drop over the course of a year or so. It's not going to be like the end of the world or anything. It might be a great buying opportunity, actually. But that is something to keep in mind for like high risk. I would not be playing with money that I needed right now. If it was, if you need it for your rent, if you need it for your groceries, do not be putting it in the market at this time, I would say. And of course, none of this is financial advice or a suggestion to buy, sell, or hold any asset whatsoever. So let's move on to TMF. TMF absolutely crashed off of this news. Absolutely crashed. On Tuesday, it was up at 64. Today, the day after the rate cut, it went as low as 59, which honestly makes no sense. The rate was cut, meaning that the value of the 20-year bonds should be up. But they are down. They're down quite significantly. Now, I have actually been buying more calls on TMF going out to February off of this event, off of the fact that it has been falling. I've been buying more. And I'll be looking for tomorrow or the next day or next week for it to get back above this blue 21 moving average there to possibly add on a little bit more. Now let me go over here and let me turn off this, and let's go over to the US 20 year. US 20 year. Yeah, so this is the daily chart. Now let's turn on some candles here. This has actually been coming up for the last 3 days. This has been going up for the last 3 days, which is what TMF is based off of. So TMF currently has decoupled from that, from basically what it should be doing for a little while now, actually, because this is, well, actually, no, it's been falling and TMF has been going up. Yeah. Okay, I see what's going on. I see what's going on. The rate actually went up. Okay, that makes sense. All right, so the rate on the 20-year actually has been going up despite the fact that there was a rate cut. That's a little bit interesting. Kind of wondering why that happened. That shouldn't be, but this is, look at this. That's a bear flag. That is a bear flag. Ooh, I like that. I'm actually pretty excited now. The bear flag, much like this right here, was a bear flag. Much like this right here was a bear flag. We're looking at a bear flag on the 20-year, the 20-year interest rate there. I like that. I like that. I'm not too concerned actually. Same one right here, right? It went up and then up a little bit and then it kind of goes up a bit and then dumps. So I wouldn't be surprised if this came down to like the 375 pretty quick actually. No, I'm feeling good about TMF, especially after looking at that. I'm feeling pretty good about my TMF right now. If I see another day of it coming down, I'll probably add some more there. All right, let's take a look at Bitcoin. Bitcoin, man, was that bear flag? Bear flag. Sorry, bull flag. Man, was that bull flag good? Look at this thing. This bull flag right here. These three candles right there from the 14th, 15th, and 16th. Ooh, those were so good. Look at that, and look at what we're getting here now. Now we have closed candles above this level here above $60,000. Now we opened and closed one above it. That is good. Today we are getting confirmation of the move. This is fantastic to see. Now the next step is to get above the descending channel here, which is at about 63,887. We get above that. We have room up to 65,130. We get over 65,130. We are making a new local high. Look at that beautiful inverted head and shoulders right there. Just huge head, shoulder, bam. This thing could take us. It could take us all the way up to back up to new highs here. Now let's see if it can maintain that. If we get some bad economic news, I don't know if it will or not. This is hanging on the word of the market in terms of saying, hey, things aren't so bad or things are really bad. We'll see if this 0.5 cut actually ends up being really good for Bitcoin, a week or a month from now versus, crashing. I would be looking towards, again, economic news. We're looking for things like the unemployment numbers to come through. Are they going up? Are they going up in a big way? That's going to be a huge one. Does inflation reignite? If we start to see inflation start to creep back up, that is a major red flag that the Fed screwed up. Okay, those two things. We're watching those two things for sure. We are also going to be looking at, we'll also be looking at the S&P 500 here to see if it starts creeping below like the 21 moving average and starts making a downtrend. That could also be a signal that the market is sneakily trapping us, doing a bull trap on us. I'd be watching that 21 EMA down there at 556.40 right now, about the 556 level. I'd be watching that. We start making candles below that, then we could end up seeing something of a drop, which could come down to the 200-day moving average, which would be a 10% correction, so that's not the worst thing in the world. But if we really get something bad, we could come all the way back to the support here from 2023, which is all the way down at 460. That'd be like the next level of like hard support if there's like a major crash. So how far would that be actually if we got that? But we're gonna watch we're gonna be watching all of these things. I will be. That'd be only 20% down. That's not so bad. That'd just be mean reversion. Anyways, we'll be watching those things. I'll be, sounding the alarm if I see any of them. Right now, I am proceeding with optimistic caution. Right? Okay, I'm optimistic, but I am also cautious. That's how I'm proceeding now at this time. And you can see here, though, that the market, especially the miners, they love this. Look at this. Everything's up now. They were up a lot more earlier, actually, but they're still up. So CleanSpark's up 3%, Bit Digital almost 7%, Bit Farms 4.5%, Mara 3.5%, Riot hanging back down there at under 2%, Iron almost 3% up, Core Z up 2%, Wolf 7.64%, Hut up 6%, Cypher up 4%, MicroStrategy up 7.45%. That's pretty good. Actually, I'm not going to go into those today. We'll talk about those individually as they get like news coming out and like they break big levels and stuff. Because this is going to get real long if I start going into them beyond that. I just want you to know that the miners are absolutely in love with this move right now. And now remember, that could flip on a dime. So we are going to be watching those indicators that I mentioned. Also FINRA margin debt. Okay, I'll be watching margin debt. I'm adding to the list. Sorry, margin debt. And we will continue to monitor the money market funds for movements in there as well. So that's all I've got for you today. Bitcoin is doing amazing. We got a 0.5 cut. It has happened. The market is in love with that decision for the time being. And with that said, please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description, as well as the channel bio, and have a profitable day.